Today, President Biden releasing an outline for his big spending bill. How do they plan to pay for it? And do they have enough support? And Facebook changes its name and shows off a new project it's working on too. The company hopes to create a new immersive experience for users. And cigarette sales in the U.S. rise for the first time in 2 decades. What's behind the surprise increase? That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. And breaking news from this afternoon, Facebook is changing its company name. The tech giant chose the name Meta to reflect current ambitions. Facebook CEO gave a preview of how the company's future could look.
It is time for us to adopt a new company brand to encompass everything that we do. To reflect who we are and what we hope to build, I am proud to announce that starting today, our company is now Meta.
The company announced the news at the Facebook Connect Summit. The name change paves the way for it to expand beyond just social media into what's called a metaverse or virtual reality universe. The concept isn't new, but it's unclear what exactly it would look like. In July, the company said it created a team to work on the project. Meta CEO Mark Zuckerberg predicts the metaverse needs 5 to 10 years to take off. And President Biden today releasing its framework for the Democrats' multi-trillion-dollar spending bill. To resolve disagreement between progressives and a few dissenting Democrats, its price tag is now cut in half to a more modest $1.75 trillion.
This framework includes historic investments in our nation and in our people. Any single element of this framework would fundamentally be viewed as a fundamental change in America. Taken together, they're truly consequential.
The plan includes government-funded universal pre-K, home health care, expanded child tax credit, expansion of Obamacare, and clean energy and climate initiatives. To pay for the spending, there's a long list of new revenue schemes. That includes a 15% minimum corporate tax, a new stock buyback tax, and a new surtax on the income of multimillionaires and billionaires. But it seems the so-called billionaire tax, which would tax unrealized capital gains, is off the table for now. Responding to the proposal, Senate Minority Leader Mitch McConnell says is going to make Americans more dependent on the government instead of working hard themselves.
At the heart of it all is one simple and dangerous assumption, that American families ought to be more reliant on the federal government. They would shred a decades-old consensus about the importance of work and massively expand cash grants to families without any employment requirements.
The two Democratic holdouts, Senators Manchin and Sinema, they seem more satisfied with the New Deal, but still unclear whether it'll have the full support from the progressives. Senator Dick Durbin, the second highest person among the Senate Democrats, says there's still a great deal of uncertainty, as the legislative text for the bill hasn't even been written yet. So working hard to keep track of all the different tax proposals is a tax foundation. We're happy to have Garrett Watson here as a senior policy analyst with the Tax Foundation. Garrett, pleasure to see you. We see a new update on the corporate tax, proposed corporate taxes changes to tax on book value of profits, if I'm not mistaken. I think the big argument from the Democrat side and from the president is that there are a number of big companies that aren't paying anything in taxes. Is this really the case in your view? And will these changes, perhaps in their words, have them pay their fair share?
So there are many cases in which corporations may have profits on their books but don't end up paying taxes on them. But the reason why is because our tax code has many incentives, both to encourage corporations to invest and to invest in particular things like R&D activity, creating vaccines, doing all sorts of activity related to green energy, and that drives down their tax bill. And the challenge with this type of proposal is it exempts many of the very things that are causing corporations not to pay taxes, even if they have both profits. So there's a trade-off here between how you design it and taking away those incentives that policymakers like and collecting revenue to fund other programs.
So these incentives that are in place at the moment, do we see the businesses actually taking advantage of them and, investing in R&D, investing in these things, or are they using them to their advantage to kind of skirt the taxes they should be paying?
So R&D activity is one of the biggest reasons why we see a reduction in the tax bill for corporations. Another big reason is due to being able to deduct the full cost of investments. That's a really important pro-growth provision of the tax code that we think is really important. But more to the point, if policymakers have an issue with these provisions that drive down those tax rates, it'd be better to deal with them directly rather than creating an indirect tax that may be complicated to administer and may not actually do the job in raising those effective tax rates.
Another new proposal, it was interesting to see it. I think that the first time I saw it was this morning, whether it just came out this morning, was this tax on share buybacks. This has been a big talking point in the financial investment community all year. I think with the low interest rates and easy money, a lot of these big companies have in fact been borrowing money or getting their hands on money and buying their shares back. A lot of people put a lot of the stock market rally over the past 12 months down to these stock buybacks. From a company's perspective, if I'm going to get now taxed at percent or 3% or whatever it is on these stock buybacks, you think this will discourage companies from doing it, or what will the effect be?
So we did see an uptick in stock buybacks after the Tax Cuts and Jobs Act, and this proposal is meant both to reduce those buybacks and potentially encourage corporations to instead invest in alternative opportunities rather than taking that cash and giving it back to shareholders. The problem is that corporations tend to make investment decisions based on the return to those investments, and this tax really doesn't change that calculus. So while it may reduce the overall amount of buybacks, the overall amount is still unclear. Maybe it encourages more dividends. It doesn't change the calculus in terms of having additional investment that we would hope would grow the economy and create wages. So this isn't the only solution by far. There needs to be efforts done to ensure that investment opportunities are widely available so they can be pursued.
This is interesting if the point of this second proposal I mentioned about the stock share buybacks is meant to encourage investment, but the first proposal you just mentioned is going to discourage investment because I can no longer write it off as a tax write-off. Am I correct?
That's right, and that is a general trend here. We see in one part of this proposal, it's providing more incentives for particular investment, say a lot of green energy, but then in other parts, it's penalizing that investment through, say, the book tax. So going either way, it would just be best to have it consistent, even if it does end up raising taxes overall, rather than having a mixed message that you're sending to corporations.
So Garrett Watson, Tax Foundation, appreciate it. Thank you.
Thank you.
And a worrying news for the economic recovery, the U.S. economy expanded at a much slower rate than expected in the third quarter. The Commerce Department says third quarter GDP grew by just 2% annualized. That's well below cut forecasts of 2.8%. It says the slowdown was driven by a sharp decline in consumer spending that accounts for more than 2/3 of U.S. GDP. Consumer spending came in at a weak 1.6% in the third quarter. Compare that to 12% in the previous quarter. Fiscal stimulus also lost much of its impact over the quarter. Now the Commerce Department is also blaming CCP virus flare-ups in some regions for the decrease in spending. The Federal Reserve recently warned that vaccine mandates were impacting employment. Now United Airlines says it's paying millions of dollars per month to keep unvaccinated workers on paid leave. For now, it can't implement its vaccine mandate because of an ongoing lawsuit. NTD's Phil Zoe reports.
At major U.S. airline United, for workers is either get the jab or get lost, no exceptions.
My responsibility is to try to do the right thing for United Airlines and what I think is safe. And I respect that you have a different opinion, but you now have a decision to make about whether you want to get vaccinated and stay at United or not.
Nearly all of the 67,000 workers at United are now vaccinated.
As you see, 99.7% of employees get vaccinated. By the way, we're broadly representative of the country, employees in all 50 states.
Several unvaccinated workers sued United last month. A district judge in Texas issued a temporary restraining order on United so it cannot enforce the mandate. United says it's costing the company nearly $3 million a month to keep unvaccinated workers on the payroll while the suit is still in court. Lawyers representing the unvaccinated workers say it's unfair to make them choose between keeping their job or getting vaccinated. They said people have the right to reject the vaccine based on religious views. The restraining order remains in effect until November 8th. Phil Zhou, NTD News.
A new survey has found that a majority of unvaccinated workers would rather quit their jobs than be ordered to get the vaccine. The Kaiser Family Foundation questioned more than 1,500 American adults in October. Of the unvaccinated, 37% said they would quit if they were forced to get the vaccine or take weekly COVID-19 tests. If their employer mandates vaccines and doesn't offer the testing option, 72% say they will quit. Comes as the Biden administration is drafting new workplace safety rules that would require businesses with 100 employees or more to mandate vaccines or frequent tests. And Costco is raising its hourly wage to $17 an hour. It's the second time this year the retailer's hiked workers' pay. In February, the company raised hourly wages to $16 an hour. Costco has about 180,000 employees in the United States, and 90% of them work hourly. This new pay bump is about $2 above Amazon, Target, and other top retailers. In fact, several large companies have increased wages recently as they compete for labor. Costco has one of the lowest turnover rates in the retail industry. And couples tying the knot are planning way ahead, forced to plan way ahead, just to ensure they get the right venue, photographer, even bridal gowns. NTD's Phil Zhou has the details.
There's pent-up demand for all wedding items and services, including wedding dresses.
So it's always a great thing to have a plan A, B, C, D, all the way through Z.
Samantha Goldberg is a wedding planner and the host of a variety of wedding shows, including Whose Wedding Is It Anyway?
We didn't know how great these gowns were until, you're in supply and demand. And then everybody starts ordering, and then it's this big circular issue where people are not able to get their gowns in time.
Goldberg says if you can't get the designer wedding dress overseas, try your local tailor or seamstress.
They can do it in a month, they can do it in a month and a half, and it's probably a lot less expensive than what you purchased overseas.
And it's not just wedding dresses.
Sometimes florists are not able to get everything that they need in order to do the wedding, so we need to come up with alternative, maybe focus more on colors instead of specific flowers.
Wedding photographers Alicia and Joshua have also noticed delays.
Brides are definitely having to wait on their dresses and other key parts of the ceremony.
There was that, and then we actually had another wedding where their dress and stuff didn't arrive until the day before.
Jarrett Judge is a wedding musician who plays up to 150 shows a year. He's trying his best to accommodate his clients.
These venues that were once available are all of a sudden completely booked out to 2022, 2023. It's difficult to reschedule.
He's offering flexibility with his bookings so newlyweds can get the wedding they dreamed of. Matthew over in Canada says, stay positive, order early, and don't give up.
When the bride called me and she told me that her bridesmaids couldn't have their dresses, so we had to go over everywhere in the right color, the right fit, the right size, and it was quite a challenge, but we made it happen all together. So we partner, the bride and I.
Phil Zhou, NTD News.
So with businesses watching the ships line up at Long Beach and wonder, is my stuff on there and is it going to get here for Christmas time and the holidays? Well, one American manufacturer has a solution. Future in Design, or Find Manufacturing in Utah, is offering to cut and sew whatever you need so that you can have it on the shelves by the end of the year. So with us is Find CEO and founder Nicolina Womack. Great to see you, Nicolina. Thanks so much for coming on. Can I ask, have the phones been hopping since the supply chains froze up, and what are people ordering?
Oh, yes, absolutely. Well, first, Paul, I do want to thank you so much for letting us come on the show today. It's so vital to our country's ability to recover that we take a hard look at the impetus surrounding the supply chain breakdown. We want to help our country move forward. And obviously, as you can tell, our antiquated system, does not meet the current consumer demand. Yes, our phone lines have actually been pretty busy and our emails. I think it's critical to understand that this generation is a new breed of consumer. They don't prioritize a race to the bottom. They want transparency in their products. They want to understand their products' impact on fairness and social justice and environmental sustainability.
So you saw demand for reshoring or bringing production back to the States even before the pandemic and before things kind of froze up and we see the ships lined up, as I mentioned. Have you seen more demand this year, or are people worried about not having their stuff for Christmas time?
Yes, absolutely. I think even more so. I read in an article today that the cost to even get your demands off the ships are about 10 times more than they were just 2 years prior. And so we've personally talked with a few customers who's had to pay upwards of $17,000 to $20,000 just to get at the port just to get their products off of the ship. And we saw this growing. Again, this was just an already growing trend that was happening before the pandemic. When we have big, massive retailers like Amazon that offer, very quick turnarounds in shipping, and where all Instagram and all of our social media is moving the market, there is a great need to get products quicker. And again, back to that sustainability, they want to see that these products are being produced with fairness.
Interesting. So it sounds like these companies, this is something long-term you feel this is going to be a long-term trend. What are your aspirations for the future?
So our goal is to actually build a complete regional manufacturing and supply chain from eastern Utah down to the very southern tip of what we call San Juan County. And our hope is to train as many individuals to own and operate different parts of what's called micro factories that can produce that to demand, that don't have those high exorbitant overhead costs where they then have to demand high, massive quantities of production, and other individuals that can help create better, more fluid supply chains that will actually meet people's demands quicker and with higher quality, and actually have those sustainability markers that are important.
Very interesting, very encouraging. Nicolina Womack, Fine Manufacturing. Appreciate it. Thank you.
Thank you so much.
And stocks closed broadly higher on Wall Street today despite the economic slowdown, marking more record highs for the Nasdaq and the S&P 500. The Dow rose 240 points, about 0.7%. S&P 500 gained 45 points, about 1%. The Nasdaq today jumped 1 4/10%. An oil giant Royal Dutch Shell, though, has completely missed its estimates. Meanwhile, their earnings presentation focuses fully on climate change. NTD's Faye Quarter has the details.
Royal Dutch Shell came in below estimates. In its quarterly report, the company posted adjusted earnings of $4.1 billion, while analysts on average projected $6 billion. And climate change seems to be at the top of Shell's agenda, with CFO Jessica Uhl beginning the results presentation on that subject.
The world prepares for COP26 as we look to rebuild the energy system for a net zero future. In this context, businesses with a strong strategy, competitive portfolio, distinct capabilities, and solid delivery will thrive.
COP26 stands for Conference of the Parties. It is the United Nations Climate Change Conference, which starts on Sunday. Shell has pledged to have net zero carbon emissions by 2050 and announced more plans in the presentation.
That is why today we announce an absolute emissions reduction target of 50% on all Scope 1 and 2 emissions under Shell's operational control by 2030, compared to 2016 levels on a net basis, which complements our existing carbon intensity targets and is another step to become a net zero emissions energy business.
Scope 1 emissions come directly from sources owned or controlled by a company. Scope 2 emissions come from the consumption of purchased energy, such as electricity and heating.
For a company like Shell, this is a very, very complex process and a very, very hard task to achieve. So I think what they're doing is the right thing, and I do understand that they can be halting in their ambitions.
Lars Karlström is the founder of Italvolt, which is building the first gigafactory in Italy. He says having oil-based products in their portfolio will haunt any company and harm their valuation.
You can look at how Tesla is valued today. They are valued more than the whole entire car industry today. And the only reason is because the rest of the OEMs, they have combustion engines in their portfolio.
Shell told investors earlier that Hurricane Ida likely blew $400 million off their adjusted earnings. Lower profits from trading also hurt third quarter results. Faye Quarter, NTD News.
And the SEC has charged a financial advisor with stealing investor funds for his own personal gain. Kenneth Welsh allegedly stole about $3 million from clients. He worked at a New Jersey branch of a large financial institution. The complaint says from 2016 to 2021, Welsh transferred client funds for his own use. Some of the money was used to pay off credit card balances, purchase gold coins, precious metals, and luxury items. Fraudulent checks were also allegedly drawn in his clients' accounts. The complaint charges him with at least 137 fraudulent transactions, and the investigation continues. And with the pandemic, demand for cigarettes has gone up for the first time in 20 years. What's behind the rise? Here's NTD's Evelyn Lee with more.
Cigarette sales grew last year for the first time in 2 decades. Since 2000, it's been on a constant downturn, but then the pandemic happened. According to the North American Quitland Consortium, the steady decline is mostly because of tobacco taxes and smoke-free laws. Matthew Gloviak is a certified counselor and a contributor at Choosing Therapy. He says during the pandemic, cigarettes can be a way to cope for people.
And with any type of substance, particularly substances of abuse, it provides a quick fix, a quick way to be able to relax.
That's in line with similar consumer behavior shifts in the pandemic. Retail alcohol sales shot up, and overall, Americans drank 14% more alcohol last year than in 2019.
It's as socially acceptable as alcohol that you can buy, even at the gas station, grocery store. It's available in restaurants. It has a high rate of accessibility. People can get it, have a few drinks after work, think nothing of it, be able to relax.
He says the same principle applies to cigarettes. Altria, the maker of Marlboro cigarettes, says that fewer social engagements led to more tobacco use occasions. Smokers are also moving away from vaping to traditional cigarettes, especially in response to restrictions on e-cigarette flavors. According to Gloviak, this trend could influence others to pick up smoking.
They see other people who are perhaps glamorous, successful, people they want to hang out with, are smoking cigarettes, especially in the younger crowds.
He says that although it seems like a quick fix, this type of coping mechanism isn't actually addressing the problem. Essentially, it's an avoidance mechanism, and it could bury people even deeper. Evelyn Lee, NTD News.
And GE Appliances plans to add more than 1,000 jobs at its Kentucky operations as part of a $450 million investment to expand capacity and launch some new products, too. It didn't offer specifics about its new product plans, but the company expects to add the new jobs by the end of 2023. It says most will be assembly line jobs, along with some management and operations support positions. CEO says the company continues to bring manufacturing back to the United States. GE Appliance was purchased by a Chinese firm, Haier, in 2016. Before that, it was owned by General Electric. And still to come this evening, McDonald's is jumping on the digital collectible craze. It's unveiling its first one ever. Find out why and how you can get one. That and more coming up on NTD Business.
What does it mean to devote your life to the truth? Does it mean investigating communist subversion here in America? Does it mean exposing the deadly fentanyl crisis in the Midwest? We're spending late nights uncovering deep government corruption. Does it mean persevering over 20 years, even after 4 masked men set one of our printing presses on fire last year? Because at a time when America's traditional values are under attack, it's the responsibility of righteous journalists to uphold truth and tradition.
Secure, the true solution for your digital privacy and security. Secure is a private and secure messaging and email solution hosted in Switzerland, using military-grade encryption and Swiss privacy laws, giving you true privacy. Secure is 100% private and does not collect or sell any of your personal data. Secure's Helix technology connects you securely to our Swiss servers without the need of a VPN, guaranteeing privacy and security for all your communications. Secure Messenger doesn't require your phone number or any personal data that hackers target. Chat by Invites allows you to chat privately and securely with anyone outside of your secure network without the need for others to download Secure. Secure Send offers you a private and secure way to email anyone outside of Secure. You won't find this level of privacy or security on any other email or instant messaging application. Visit secure.com. Regain and protect your privacy today.
Welcome back. The McRib is turning 40, and to celebrate, McDonald's is giving away a one-of-a-kind digital art. It's created a limited number of non-fungible tokens, or NFTs, in honor of the McRib's 40th anniversary. An NFT is a unique piece of virtual art that can't be duplicated. McDonald's NFT is a digital version of the McRib. The company says 10 fans on Twitter will be gifted the digital art in a sweepstakes starting Monday. It's also the day the McRib makes its return to McDonald's locations nationwide. As always, it's for a limited time, too. And then auto insurance nonprofit says smaller SUVs struggled with its new crash test, but the 2021 Mazda CX-5 came out on top. On Wednesday, the Insurance Institute for Highway Safety announced the Mazda SUV was only one of 20 vehicles to receive a good rating on its test. 9 others earned acceptable, while the Honda HR-V and Mitsubishi Eclipse Cross received the worst rating of poor. This year's crash test focused on the tougher side crash. The group says side impacts accounted for 23% of passenger deaths in 2019, but it notes Mazda shows that protection is achievable in a more severe side crash. That's the latest business updates for today, but you can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern. For NTD Business, it's all for today. Thank you for watching. We'll see you tomorrow.